TV, Vietnamese American Arizona Television. Hello and welcome to VAA TV Real Estate Talk Show with Scott Barlowe and Linh. Investing can be tricky, especially for beginners. However, with the right knowledge and understanding, you can achieve success in your investment. Our talk show is designed to bring out great topics for investors like you. We hope you enjoy the show and welcome to submit any feedback during and after the show. Hello everyone, welcome back to the VAA TV Real Estate Show with Mr. Scott Barlowe and Linh. So today we, as normal, we will share with you all the information about the recent news of the real estate world.
Absolutely. Yes. Probably the two biggest things that came out this week were that, number one, the interest rates are probably going to stay stuck. I think a lot of the experts who were hoping or perhaps thinking that interest rates would start to fall by the time that the weather was warming up. I think everybody's just kind of bearing and grinning it now, and with the expectation that it's probably going to stay about where it's at for at least for a few more months.
Oh, wow.
You know, as long as inflation is still high, in the opinion of the Fed, they're going to keep the interest rates up. At least they're not raising them anymore. But I think the speculation is that they're probably going to be at least one rate cut before the end of the year. But I would say that what everybody should probably expect is we're in the new normal for at least for the next few months when it comes to rates.
So we're talking about past summer.
Probably well through the summer. So get used to what we've got. You know, the amazing thing though is we got so spoiled over the last few years with rates down in the threes and everything. Those were historically low. And whereas, you know, the rates that we're actually seeing right now, I know when I bought my first house, this was about what I was at.
Really? But how about the price?
Oh, the price was much lower.
Yeah?
Oh, yeah.
Oh, so it's both way, like price low and interest low at that time.
Well, the price was much lower back then.
Yeah.
Because you're talking back in the 80s.
Oh, okay.
And
yeah, make a big difference.
But we were still paying in the 7-8% range, and that was not uncommon. But you know, certainly now when the median price on a house in the Phoenix area is around 435,000, that is a significantly large amount of interest that you're paying on that house.
Yeah. So who said that invest in Arizona didn't make profit? It's make profit, right?
Oh, yes, over time.
Because like before they say, the city, I mean the state that never increased has house increase. Oh, but now it is.
It's always increasing.
Yeah.
Historically, here in the Phoenix metro area, our home prices appreciate about 4% per year. Now, that's saying if you look at a 25-year graph, it's not going to be a straight line 4%. You're going to have ups and downs, and sometimes you know just a few years ago we had 18 and 20% pricing appreciation. So you know. There will be peaks, there will be some small valleys, but over time, the value of the homes has gone up significantly.
Wow.
And so, you know, I mentioned last week that I had a client that I sold him a house back right after or during the recession. Yes. And he bought, it was a bank-owned home. He bought it for about $78,000, and now that house is probably worth, you know, in that 420 to 450 range.
Wow.
So I mean,
I like that investment.
It's a great investment. He used it as a vacation home, and so he'd done a lot of different things with it. But yeah, the bottom line is when it comes to interest rates, we're not going to see a whole lot of movement here for a while unless there is a significant decrease in the inflation rate. And at this point, it seems to be staying pretty persistent. I know I've read a couple of articles today with other bankers who are talking about the fact that it would help some of the regional banks a little bit if they could go ahead and just back off those rates just a little bit so that they could get more money, become a little more liquid, and bring additional business in. But we're at that stage where, like I said, the Fed has just decided they're going to keep it right there where it's at. And so we probably just need to get used to it.
So, like you mentioned about that foreclosed home. Not many foreclosed home nowadays, though.
You know, that's the amazing thing. I heard from people, and obviously there were folks that probably weren't really well informed, but when the interest rates went back up, people started going, oh gosh, there's going to be a lot of foreclosures. Well, frankly, we're just about at the lowest rate of foreclosures that we have been. And the reason being, most people have equity in their homes. If they bought just in the last couple of years, they still have equity in their homes. So they need to sell. They can turn around, they can sell them, they get out from under it. So there's not a need for a foreclosure.
And it's like really a buyer always looking to buy a house, right?
Yes, yes. They're right now.
It's not difficult to sell a home right now.
Well, it's taken a little bit more time, and you're having to look at it at ways to be a little more innovative to come up with financing, because the financing is probably the biggest impediment for people being able to buy homes. And I think that by design, the feds have kept the interest rates high to kind of slow things down. I was reading an article today, and they were talking about, when you normally start raising rates, one of the first things that happens is construction slows down. Well, construction hasn't slowed down. In fact, since they've raised rates, they're still bringing more workers on. Yeah. So, there's a lot of things that are not lining up.
Building up, build up new stuff.
Right. So, some of the economists are looking at it, and they're questioning whether the Fed is actually operating properly. I mean, I'm not enough of an expert to tell you yay or nay, but some of them feel like, the economy is not acting the way that it has traditionally. And one of the things being is we're at very low unemployment.
Yes.
And
that's right.
if there were to be cash flowing back into the marketplace in the form of lower interest rates, that the economy would even accelerate more. So, and some people are looking at that going, is that a bad thing?
Yeah.
So, I mean, you've got both, but certainly, as I said last week, the price of gasoline, the price of fuel, those are the most concerning things for everybody that has to go to the grocery store or the gas pump, because that's a shared expense that we all have that comes into our, and it takes right out of our pocketbooks. It takes away from our buying ability.
Right, yeah. So with the investment like this, is that right that we need to do a lot of networking for our investment in anything?
You know what? Yeah. When it comes to investing, having a network is always a very, very beneficial thing. I'm in a position, obviously, where being in a brokerage, I network with buyers, I network with sellers, and I network with other realtors. So, I mean, I'm constantly getting information on what's available on the market. I know where to go to get the information so that I've got the most up-to-date information to share with my clients.
So you don't think there's a competition, right? I mean, they all share, like with the same, like realtor and realtor, they do share
for the most part, one thing I might mention about when it comes to realtors, the one thing that makes realtors different than just a real estate salesperson, and if you recall, the difference is a real estate salesperson is licensed by the state of Arizona. So I'm licensed by the state of Arizona.
Right.
But there are many commercial brokers who are not realtors. I am a realtor because I'm a member of the National Association of Realtors. My broker is a realtor, so by virtue of the fact that our brokerage is aligned with the National Association of Realtors, all of the salespeople in our office are realtors. We have to be members.
Okay, if no member, they still can do the business?
You can do the business and not be a realtor. You can be a real estate salesperson, but a realtor is the trademark name for somebody that is a member of the National Association of Realtors.
With the reputation and all that.
Yes, that's correct.
But everything else, like they still get the same
For the most part, when
like money, like
yeah,
commission, things
yeah,
like that.
they work the same way. One thing I might mention, you're asking me about cooperation and
Yes.
those types of things. One of the big advantages of the National Association of Realtors is that they do set up systems and they do require members to cooperate with each other.
Yeah.
So that we do share information. And even though, I can look at every other realtor that's in my office, they're a competitor when it comes to going out there and getting clients to represent.
Okay.
But we cooperate when it comes to sharing information, understanding what's going on in the market, those types of things. Education and that's one of the big things about being in the National Association of Realtors is the amount of education and the networking opportunities that you do have.
Yeah. That's good. They don't do dirty things around, like steal clients and all that.
Well, you're not supposed to, and certainly there are ramifications for people that do. There's disciplinary boards that realtors can be taken to, and they can be fined. They can be kicked out of the association. Ultimately, it's kind of funny because even though like I was saying before, they're not. You can not be a member of the National Association of Realtors, and you can go ahead and you can do different things. Well, the real estate Department of Real Estate is still looking at some of those same types of standards as industry standards for how are people supposed to treat each other? How are licensees supposed to treat the general public and each other? And so if you're doing shady things, if you're doing underhanded and dastardly things, it'll catch up with you.
Yeah, it will come back, right? I mean,
Yes.
your name is there, and everybody will.
Your name is there, and over the years, you can end up with getting fines and levies against you, both with the National Association of Realtors through the Arizona Realtor Association and the local boards. They can all do it, but at the same token, if the level of action that you committed was such, the state can take your license, they can fine you, they can require you to go get additional training, all kinds of things. So, I mean, when it comes to it,
ethical. Yeah.
yes, when it comes to it, you need to. We're required and we're expected to treat people ethically.
Yeah. So you think what type of profession that we should include into our network for the investment?
Well, that's a great question. It's just one of the first things that you think about, and let's go to the simplest and easiest of the types of real estate to own, and that's owning a house. So if you think for a moment, who do you need to be able to have to help you get a house? Well, you may want to include a realtor in there. If you're not going through a realtor, you may want to have an attorney because, let's suppose that it's an estate sale or you have a situation where it becomes an inheritance. Maybe you've got a family member who passed away and the estate is getting divided up. If you recall, we talked about a beneficiary's deed a few weeks ago.
Right.
Well, it's the same type of situation where you may end up needing to have an attorney to help sort that all out, especially if somebody wants to do wants to partition that property, which basically is forcing the sale. And if you want to keep the property and the other 50% say wants to hold on to the property, they may force the sale or force you to go get a new loan to buy out that other person.
Oh, okay.
So that
true.
they can get their portion. So, and that's where you may want an attorney. And you notice I just mentioned buy them out. So if you're going to buy them out, what are you going to need?
Yeah.
You're going to need a good mortgage.
Yeah.
You're going to need a mortgage broker.
Yeah, mortgage broker. So that you can borrow more loan for that portion.
Exactly.
Right?
And then when you're going through all of that, you'll want to have a title company because you're
going to
cover
the coverage.
They'll come up with they'll do the new recording of the new deed as well as the recording of the promissory note and the deed of trust, which comes from the lender. So those things will have to be taken care of. Another person that you may want to have in your networking group, especially if you're going to be renting the house, is you may want to have a property manager.
Management, yeah. Good management.
So that if you don't manage it yourself, that you've got somebody that can do it. By the same token, if you are managing a property, how handy are you? You know, it's one thing to be able to go in and paint a room or take wallpaper down off of a wall, but it's an entirely different thing if you have to go put a new air conditioning unit. So one of the things you probably want to have on there are some good tradespeople. Typically air conditioning, plumbing, those types, electricians, roofers, those types of people that you know that you can call when there is an emergency, because you know as well as I do, we get the monsoons,
Right.
and I've had rental properties myself. A few years ago in Tempe, my property had a problem with the roof, and it had a microburst, and it actually peeled part of the roof back off.
Oh.
So I had to call my insurance company.
Yeah.
There's somebody else that you need. You need a good
You
insurance
need a
company.
Good insurance company.
And I might add, you know,
Agent,
you've got
right?
homeowners insurance, but as you get into larger properties, the insurance companies this year, the rates have gone up significantly. So you need to shop around, get a good agent, get a good insurance company. But so insurers, tradespeople, title people, an attorney, not that you're going to use them every day, but have them. Then if you're wanting to actively buy and sell real estate, you want to get in with a group of like-minded people, people who know about
1031 exchange too, right?
Well,
Yeah,
they can, a 1031
Yeah.
exchange,
Yeah.
I'll come back to that, but I mean, one of the first things is a like-minded group of people, people who want to invest in real estate. A place where I've gone through some training and I've certainly networked at is called the Arizona Real Estate Investors Association, ASREA. Arizona Real Estate Investors Association. So if you ever wanting to get a little extra education, or if you want to get some information about different types of investing, that's a great place to do it. And I've been there for meetings. I've been a member over the years. But typically before one of the meetings, you'll go there for 30, 40 minutes early. And it's sort of a mixer, kind of a group setting. And you'll have just exactly
like
what I was talking
Chamber
about.
of Commerce, like?
Well, no, these are people that are all interested
Related
in
to the same type, like investments.
So you'll have lenders there, you'll have attorneys there. You know, one of the things
Title, escrow.
exactly. If you're gonna be investing in a lot of properties, you probably want to set up an LLC because you don't want to keep things in your name.
Right.
You want to move some of that risk. So you've got attorneys to help you do that. You've got insurance people there. You've got roofers. You've got different contractors who can be there to help you out with all kinds of things. You know, if you want to have a home warranty company, if you want to have property management. So those are all kind of the people that you want to have in your network, as well as, like I said, people that are like-minded. And that's one of the things that's always cool about knowing some of the other folks that are out there buying and selling, is that you hear what's on the market, who got a good deal. Maybe they've done something.
Trick or something.
Yeah, maybe. Every once in a while, you know, you think that you've been in it for a number of years, and all of a sudden somebody comes up with a different idea on how to do things. And I mean, so, you know, it kind of is like, I use the analogy, it's like a smorgasbord. You don't have to eat the whole meal, but go there and pick out the parts that work for you, that are of interest to you.
Very interesting, yeah.
And, you know, and...
So the website has the information, like what day, what time, and all that they record.
Absolutely. And you can join, and you can get all kinds of information. You can go to their meetings. They have a lot of different things going on, and ways to help people out, especially if they have questions. You know, the other thing too is you mentioned when it comes to networking, and I'm involved in a couple of groups through the Chamber of Commerce.
Right.
So I see other business people, and I can share the type of how I operate, how I do business. I hear how they do business. So in turn, they've kind of become part of my network. And I've used tradespeople from that group.
Yes.
I've used title companies, attorneys. Just
somebody that you know that they've done good work and all that.
Absolutely. And somebody that you see on a regular basis.
They do the work.
Yes,
yeah, right.
Absolutely.
Yeah. Because that's the next question I want to ask. That of course when we invest, we have the broker who help us buy sell, let's say, but we also need a mentor, right? And like besides the the buying and decide to buy or something, but the mentor to invest.
You know, that's an excellent point.
Yeah.
You know, I think back because I came to real estate later on in life. I'd already had a couple of different careers.
Yeah.
And I look back and I think to myself, if I knew then what I know now, I would be sitting much better off.
Much better.
Because you're right, you do need somebody to mentor you. As we've said before, you don't know what you don't know. And nobody cares about your money as much as you do.
You do, yeah.
So I go back to things like ASREA, the Arizona Real Estate Investors Association. There's people there that are experienced. You don't have to have somebody that necessarily is holding your hand.
Yeah.
But you can talk to people, you can get good information. They do have blogs and they have podcasts, things like that, where you can listen in, get your questions answered. You know, the way I know a lot of people did it originally was they read books, and there are a ton of books on how to invest in real estate. But ultimately, and I go back to that smorgasbord idea, get exposed to as many ideas as you can, find the ones that work for you individually, and then begin doing it.
Yeah.
The biggest thing that I think that people don't really get into investing is they're a little bit scared.
Yeah.
They need to take...
Because they only do one advice, you know, like you said, like do many, and then pick and choose, right?
Pick and choose, yeah. And, you know, you'll figure out pretty quickly who knows what they're talking about, and you may have people that have different ideas. You know, one thing you just mentioned a moment ago was a 1031 exchange.
Yeah.
It never fails to amaze me because I'm in contact with lots and lots of investors, folks that own multifamily properties. And one of the things I hear from them is, you know, they're concerned about capital gains tax. And I said, why don't you do a 1031 exchange? Now, some people are very well versed in them, and some people aren't. So let's just kind of refresh the memories on what's a 1031 exchange. 1031 stands for a section of the IRS tax code. And what it basically does, it allows somebody that is investing, in our case, we're going to talk about real estate investing, but they invest in real estate, and as that property goes up in value, just like that guy that I was telling you about, where he had the house. Imagine if that was a rental house,
400,
and it went from 70
something,
77, I think it was 78,000.
78 to
78,000 to well over 400.
Yeah.
So that's a significant amount of money, and that's not his primary home. So he's going to pay capital gains on any profit. So if he subtracts that 78,000 out of, let's just say we're going to round it to 80, subtract that from 420. So you're sitting there at 300
for the gain. To pay for the capital gain.
340,000 that's subject to capital gains at a rate of about 20%.
Wow.
So think of that, if you were selling that and you had that nest egg and you had to pay out 20% of the $340,000 that you gained, think about how big a tax bill that would be. What could you do as far as going out and buying something? It would take your buying power away. But if you were able to keep all that money and not pay capital gains on it, you could buy something bigger. So that was the idea, is that allow you to hold on to your money, you go buy something bigger. Now, you have certain, and then at some point you will have to cash out. So the IRS is hoping that by the time you cash out, you're buying properties that are worth $2, $3, $4 million. And imagine paying the capital gains on that.
Yeah.
So as you're going along, you're building up. It's good for the government because they're going to get their taxes one day, as we all know.
Yeah. Sooner or later.
Sooner or later, so they would rather have more taxes.
Yeah.
Even if they have to have it put off in time. So the way that we do that without having to pay is we go to sell our property. Instead of those proceeds coming to us, it goes to a third party, and it's called a qualified intermediary. A lot of them are just refer to themselves as 1031 companies, 1031 exchange companies. But those companies will hold your funds. They're a fiduciary. You don't get to touch them after you sold that.
Right.
So then you've got 45 days to identify the next property that you're going to purchase. And you can pick a couple as backups. You make your offer, you do things like you would traditionally, and then when it comes time to pay for it, those funds flow to the title company from that qualified intermediary, and there's your down payment or your full payment, depending on what it is that you're buying. The key thing is that second property that you're purchasing, that you have to close escrow within 180 days of when the first property closed escrow. So you can't dilly-dally, but it's almost 6 months. But
right. So I think we can add one more person in the real estate network, which is CPA.
Yes. Well, actually,
you can
add a CPA to it, as well as a 1031 exchange company.
So you think like what kind of mistake we should avoid in doing the profession networking for the investor?
Well, I think probably the biggest thing that we probably should avoid is trying to do things inexpensively, trying to cut corners. Because, and it goes back to like what we were talking about before on improvements on properties.
Right.
There are certain types of, certain types of improvements or repairs that absolutely have to be done by licensed contractors. Your roof, your air conditioning, your plumbing, your electrical, those types of things, you need to have a licensed contractor do it. Because at the end of the day, what we're really trying to do is we're trying to move risk away from us, and at the same time add value to the property. When we add value to the property, we can sell it for more later. Now, putting a new air conditioner on it may or may not increase the value of the property significantly, but you and I both know that if you got two houses in the same subdivision sitting side by side, and they were both built 15 years ago, and this house right here, he's got a brand new air conditioner, and this guy over here, he's got the original air conditioner. Which house are you going to choose?
Brand new one.
The one with the new air conditioner.
Exactly.
So
I like new one.
The value of the houses may not be significantly different, but certainly having that new air conditioner on there is a big improvement. It's a value add to that property. So that's where I look at those things and I go, don't cut corners. If you're going to do an addition on a property, and this is the one that probably you see the most, is somebody does an addition, and because you can't see it from the street, the city, the assessor, they don't know. And then all of a sudden you want to go sell it, and you go, well, I've got 400 more square feet of living space. Well, the assessor doesn't show it in his records. And so how do you get that accounted for? We've talked about ways where you can go back to the city and get it remedied. You can pay any fines for not procuring a building permit. You can have the inspections, everything, get it certified, and then once it's done, let that information flow to the county assessor, and then you've got everything above board. But once again, when you were asking, that's cutting corners.
Yeah, save a little bit. Is because if it's every time when we ask some service, we pay, then it's going to be a big thing. Right?
Yes.
And that's not even invest yet, right?
Well, and you need to be very careful with who you're getting.
Yeah.
One of the things, especially when it comes to construction or building related things, I highly recommend that you look at who it is you're hiring.
Exactly.
Most everybody that is a contractor, you will see on their business card or on their forms, ROC. It stands for Register of Contractors, and next to that there will be a set of numbers.
Oh, so that's legit.
They have to have that, number one. But don't stop there. You can go to their website, to the Register of Contractors website, put their name in and double check to make sure that yes, they are a licensed contractor, and yes, they're up to date, and yes, they have the proper insurance and bonds.
Oh, okay.
The reason being is, when some of those contractors do their work and you're selling the house, let's say you've got a electrician that comes out and he puts a bunch of GFI circuits in, ground fault interrupters.
Yeah.
And the homeowner comes in, new homeowner comes in, and there's a problem and somebody gets shocked really badly.
Okay. Ooh.
Who's responsible?
The owner, like what we own, right? But
It could be-
but the person that working will be
The
responsible.
electrician.
Yeah.
If it's a licensed electrician, the licensed electrician is properly bonded and everything.
Okay.
So that becomes one of those things where I said before, we're always trying to take risk off of ourselves. By the contractor doing it, the contractor has to have special education, additional training. He has to go through different licensing techniques and all kinds of things to make sure that he's competent. He assumes more of the risk.
Okay. Yeah. The ROC and then the number and then on the website.
Yes.
Right, for
Register
that.
of Contractors.
Yeah.
And,
Our time up. And then like how about quickly portfolio? So do you think like we should do like different things investment in our portfolio for the investment?
well, you know, it also goes back to like what we've talked about in the past. Nobody cares about your money as much as you do.
Okay.
And we all tend to be comfortable buying and selling and investing in one thing versus another. The guy that likes to buy single-family homes, he may not want to buy a strip center.
What I mean is like maybe like financial advisor,
Well,
some different type of investment.
If you're looking to do different types of investments, and certainly you can balance it. I know that there's a lot of folks that have retirement accounts with IRAs, and they have stocks and bonds. They buy municipal bonds. They buy annuities. All kinds of different instruments out there where they can invest in them. You know, some, as we've said before, bonds and annuities on the scale of risk versus reward or risk versus appreciation is the safest, but it doesn't grow as fast.
Okay.
Real estate's usually a little bit less, a little bit more risky. Has the opportunity in many cases, and certainly here in the Phoenix metro area, over the last 20 years or so, I'd say it's been very good as far as appreciation and bringing values up. And then of course you have stocks, and there are certain stocks, you know, the blue chip stocks, which always have been very high performers, but stocks come and go.
That's true. Okay, I think I'm gonna like stop right here because I know people are gonna wanna hear more, you know. But then we have to save a little because I know that you raise up something, but I know people have a lot of questions, so we can save it to another next week.
Okay.
So that we can do more for this. Okay.
Absolutely.
Yeah. So we already start out something. So a lot of question, a lot of concerning about things that you described today. So this is what we're gonna do, and we will. Hope to see you back next week to answer all the questions for the audience.
We'll do. We'll
so
try
much.
to keep answering the questions and just send them into Lynn V. I'd be happy to answer them for you.
Yeah.
And if you've got something specific, you've got my contact information down there. I'm always happy to answer questions. Doesn't cost anything to ask questions.
Yeah. So he's very great one to get all information for you guys. Thanks for watching VAA TV Real Estate Show, and see you next time. Have a wonderful week.
Bye-bye.
Bye.
Xin cảm ơn sự theo dõi của tất cả quý vị trong những giây phút vừa qua. Chương trình VAA TV xin kính chào, tạm biệt và xin hẹn gặp lại quý vị vào lần phát hình kỳ tới. Mọi chi tiết về thông tin thương mại và bảo trợ, xin mời quý vị hãy liên lạc về địa chỉ email vaatelevision@gmail.com và số điện thoại là 480 289 9816 480 289 9816, website vaatv.com và vaaznews.com. Xin kính chào, tạm biệt.